The Pennsylvania Project and the Public Banking Institute present Public Banks for Public Works, Banking on the Commonwealth. This program was presented on October 18, 2014 at the Quaker Friends Center in Philadelphia, PA, as part of the East Coast National Symposium on Public Banks. This series of presentations covers several fundamentals of public banking, as well as related issues, factors, and opportunities. In this video, DEMOS Vice President of Policy and Outreach, Lenore Palladino, discusses the crisis in the cost of education in remarks entitled Millennials and Student Debt. The session is introduced by PBI and Pennsylvania Board Director Walt McCree.
We're going to resume now, and we're going to get into an issue that, or at least a problem that is chronic across the country, and it's a tragedy. It's a criminal sort of a situation, and that is the fact that our students can't afford their education. That we now live in a country that where people are frequently indebted for decades to repay the cost of their education, and of course, not to speak of the education that we're supposedly giving them on the public education basic level. But I will let Lenore Palladino, who is the Vice President of Policy and Outreach with the think tank DEMOS, one of the most progressive and active commentators and organizers toward public policy in the country, talk about student debt and the conditions of that. So Lenore, welcome to the stage.
Hi, good morning. I'm going to stand up here, maybe even down here, because I'm quite short. And so if I stand back there, you won't be able to see me. So good morning. As Walt said, my name is Lenore Palladino. I'm the Vice President of Policy and Outreach at DEMOS, which is a social justice public policy organization in New York City. And if you're also thinking to yourself, that name sounds strangely familiar, I also was a campaign director at Move On for about 6 years, and if you got an email from Move On in the last 6 years, chances are you got one from me, and so people are often like, I know your name from somewhere, so that's where. And my background really is as a campaigner and an organizer. I've been at DEMOS for about a year. In case you're not familiar with us, we're in New York, but we're really a nationally focused organization that, as Walt said, we're focused on economic justice, political justice, and racial justice. And we really work at the intersection of all three issues and see ourselves as a solidarity organization within the broader progressive movement. So a lot of the work that I do is working with campaigns and coalitions like you all on a variety of issues because we believe that all the issues we're facing right now in this country really do intersect. So that's why I was really honored to be asked to join you all today to talk about the higher education crisis that we're facing, and public banking, and why public banking could be a solution to the crisis we're facing, in addition to a solution to so many other ills. So I just want to first say thank you to Walt, to Ellen, to Mike, Joan, Gwen, other folks who I've met both here today and previously, and also I'm honored to come after Harold Meyerson, who I've been a big fan of for a long time. And thanks for switching the schedule around, because I have a wedding that I have to get back to in New York this afternoon. So that's why not mine, no. Not mine. I got the toddler already. So I was talking at the break a little bit with folks, and I bet that there is a lot of knowledge already in this room about the higher education crisis. I also am an organizer, and so I really believe in popular education and participation. So what I'm going to try to do is really encourage and facilitate here a conversation. And I was just reminded, as a side note, the last time I was here, actually at the Friends Center, was for a large student gathering in 2003 and 2004. I was on the board or committee or whatever we called it of something called the National Youth and Student Peace Coalition. I was the staff director for an organization called United Students Against Sweatshops, which really started in the late 90s as part of looking for solutions to a really big problem, which was the injustices we were seeing of globalization around the world, looking for solutions where we could build power in our own communities to make change. So USAS, which is a student-run organization, evolved to take on the power that universities have in the global labor system, the global sweatshop system. It's a whole other issue we won't get into. But we had, through that, I was part of this national student and youth movement against the Iraq War. And I'm just reminded being here today how important it is that any movement in this country, and probably in all countries throughout time, that we're really connected to youth and student, both issues and leaders, because youth and students really are the ones most likely to be active in making change, to be the ones who are most creative and most radical in their tactics and in their strategies. And I think that it's really exciting to me that this conversation is happening here, both because of obviously the longer history that Mike spoke about at the beginning in terms of Philadelphia and the leadership of the Quakers, but also there is a more recent movement history in this place that I hope that we're part of. So I'm going to talk first about the higher education crisis and the student debt crisis, and really ask for folks to think about how this is connected to your life and also what you know about the crisis. And then we'll talk about public banking. And I wish that Ellen had been able to go before me because of that framing that she will most certainly give about public banks more generally. But I think there's enough knowledge in the room that what I'm hoping we can do is have some conversation about why we think public banks can be a solution, a partial solution to this crisis. So first, I want to ask for a couple folks to stand up and say, what do you know about the higher education affordability crisis right now? What either is your experience with it, whether your family is facing something, or whether you know people in your community are facing the crisis. What's your observation about what's going on? And I'm also going to ask, because I am an organizer, people introduce yourselves when you speak, and also try to be succinct so we can hear from a number of voices. And we're also just going to try for the moment for folks to be loud rather than do the microphone, and we'll see if that works. If you can speak to the whole room. So somebody had their hand up. Ma'am, right here. Stand up, please.
I'm from DC, Public Banking Group, and what really, and it's really, I was well nice a few years back to realize how hard the student debt crisis is. My son came to me and wanted to borrow $65,000 to pay off his debt. I said, how did you get this debt? I mean, what are you talking about? Didn't have grants and this and blah, blah, blah. And he is not very forthcoming with details, so I just worked it out and we got it taken care of. However, fortunately, I was able to do that. But I do not understand how, for my generation, when you had Pell grants and this grant and that grant, and I never had any loans at all. So I worked part-time, put myself through school and so on. So I really was taken aback a few years back, especially I guess with Occupy, bringing the issue forward. What happened? And I don't understand.
Higher education is no longer an elite issue. It's no longer something that's secondary to other economic justice issues we're facing right now. It really is central to the crisis of inequality we're experiencing today. So let me ask you right here.
But I was a university teacher, and I wanted to ask you, well, of course, my son was very lucky. We had saved for his college, and then he paid by working for the university for which where he got an MA. It took him 6 years, but he did it while working. But his partner has a huge debt, and my young friends, of whom I have many, are all incredibly much in debt on the Hawk, and they pay about $600 a month, which is a lot. But I wondered if you could connect it to something that I see happening in my former university, which is Tempo in the city, and which is not even the most notorious, but it's the fact that universities at the same time are moving to what we would call in Europe a precarious personnel. I mean, everybody is adjunct or temp, and they're organizing. In fact, at Tempo, they are trying to have a union, and immediately they get letters from the provost intervening in the formation, or against, rather, the formation of a union. I wonder if we can connect.
That's a great connection. So I see a lot of hands. I'm going to say a couple of framing things, and then come back to the group just to, I think, give us some shared context. So, and you spoke about what's happened in the last 30 years. There's been a complete disinvestment by states and the federal government. The irony is, it's not as if less money is being spent. The federal government spends a huge amount of money giving out loans, but they make that money back with interest. And so here we have a situation where rather than money going to grants and an increasing number of making college affordable for people in general, it's going to loans, which makes it feel more affordable when you start, but doesn't make it feel more affordable when you get out, I can tell you that. And what's happened is there's been, like so many other public goods in our system, a real move towards privatization. And what I mean by this is a couple things. There's a lot of issues with privatization we could talk about on campuses, which I'm actually not going to go deeply into, that we could, but it would take us, we could have a whole day actually on higher education issues, and I don't want to drift us too far off course from public banking. But what I mean specifically is there's been a move such that families are expected to cover roughly 2/3 of the cost of a student's education, whereas 30 years ago it was more like 1/3. And the proportion, the ratios are very different when you go into the associate degree level, when you go to the community college level, it's even worse. So there's been really simply a disinvestment by the states in higher education as a public good. And I think that has major ramifications in terms of the hiring of adjuncts. But what I'm really focused on here is the impact that it has on students. I was an adjunct and was part of a union organizing drive myself, so I could speak about that separately. But what's happened is that those of us, so I'm a millennial, I'm the first year of the millennials, but especially those who are coming up, going to college in the 2000s and now, are faced with astronomical levels of debt when they graduate. And their families and themselves, they're not equipped with the understanding of what they're getting into going in. People are just simply totally unaware of what's going to be the lifetime impact of this amount of debt. So I want to connect this to public banking for a second, because we're going to talk a little bit more about higher ed, but I want to make sure we're clear about why this is an issue for public banking. So when you're borrowing massive amounts of money, right, what matters not besides the amount? The interest rate, right? There's been a lot going on within Congress over the last couple of years about what the interest rate should be for students such as myself paying back federal loans. And public banks could quite simply lend money to students at a far lower rate. They could lend money at this, to students within their states or municipalities at a lower rate than the federal government is. Far too many students are maxing out their federal loans, and this is where it really gets bad, going to Wall Street. They're borrowing from private lenders who function in many ways. There's lots of parallels between what's happening in that market and what happened in the mortgage market. There's, what we should think of as predatory lending. And so when you're looking at rates 13, 14%, a state bank or a public bank could be a really clear solution so that students have access to the kinds of loans that they need. This won't solve, we at Demos believe that we need a wholesale reinvestment in higher education as a public good. So the other way that public banks would figure into that part of the equation is that public banks, because they are a lender, would still collect some amount of interest. You could put that interest directly into reinvesting in higher education, right? So raising the amount of money that a state puts into the cost of funding a public institution, and lowering the total amount of money that a family is expected to pay in tuition, which then of course affects how much they have to borrow. So really state banks can become a virtuous cycle within the higher education lending system. And then a third way is that they could become, for those of us who are suffering right now from the $1.3 trillion, and I did say trillion with a T, I did not say billion, I said trillion, the $1.3 trillion of student debt that we currently have right now in this country, which will become $2 trillion quickly unless we do something about it. For those of us who have that kind of debt, it could help us refinance that debt at a lower interest rate. So a public bank could serve that third function as well. You may ask, is this a fantasy? Is this something that sounds nice but could never happen? No, because it's happening right now in the state of North Dakota. So I'm sure Ellen and others will talk about the Bank of North Dakota later, but that is our example in this country right now of where a public bank plays directly into the higher education system. So I want to go back. There are a bunch of folks who wanted to say something. Start with you and continue the conversation.
I co-signed my nephew's college loans, which still not paid off, and their family is living in a tiny little apartment and can't afford a house. So I see, can you speak to the student debt slowing the whole economy down?
Yes. That's a great point. We actually at Demos, my colleague Robbie Hilton-Smith wrote a report last year called At What Cost, which actually did some really good econometric modeling or economic modeling to look at what the impact would be of those of us who are, my age and younger, who have taken on massive amounts of debt, what the impact would be over our lifetime. It's when we're, in our sort of early adult years, it's not buying homes, it's not buying cars, it's certainly not being able to save for our own children's college. As I said, I have a toddler, I'm thinking about this a lot, what's gonna be the cost for her? And then last of all, how do we then save for ourselves? So, there's been some, I think, debate within the media over the last couple months over what the actual lifetime impact would be. We have done research and we, feel strongly that there are major ramifications, which is why I think this is an economic justice issue. It's as central as the minimum wage fights, it's as central as the paid sick days fights. Because another misconception that I actually want to get to is that, universities, when we're talking about the higher education crisis, we're talking about private universities or we're only talking about four-year public universities, but if you need to go to community college or you need to go to get an associate's degree, that you're fine. No, the crisis is actually in some ways worse at community colleges. The total amount of debt that people are taking out is for sure lower, but for so many people, getting access to finishing or a two-year degree at the community college level is the key to being able to get a life-sustaining or family-sustaining job in this economy. And it's simply out of reach. It's been another area where there's been massive disinvestment. And by some, it depends on how you count exactly, but by some people's estimation, over half the students in this country right now in higher education are what we call non-traditionals. So when you think of your average 18-year-old moving into the dorm, graduating at 22, over half of people who are actually in the system right now and suffering from this crisis are going back to school in their 30s or are living off campus and taking a degree over 6 to 8 years. Another statistic I'll give you, I could give you endless statistics, so I don't want to do that, but another one I'll give you that shocked me a little bit, let me just make sure I get it right. Let me ask people to guess a little bit. What percentage of students do you think enter a higher education institution, take on debt, and then don't graduate?
50. Over 50.
You guys are more pessimistic even than 30%. It's 30%. So when you think about that, we also have to remember that the conversation about, well, it's an investment in your, working life and your future, which certainly is. I'm a big, a believer in education for sure. We have to remember those folks who are forced to drop out because they can't afford it anymore, and then are still forced to pay off those loans. Those loans do not disappear if you do not get your degree. And for me, just to give you a quick analogy of how this has been a real generational shift, I just have to look to my own family, and I won't go into the details, but I'm sure this would resonate with many of you. When I think about the difference of my parents' experience going to public universities, and then I have a younger sister who has recently, she had a bunch of fits and starts getting through college. She ended up going to community college and then to the University of Massachusetts, where she lives in Amherst, Massachusetts. And then she wanted to become a school guidance counselor. My mother is also a school guidance counselor. And she went to go to the local community college to get her degree. She also has 2 young children, so she was trying to figure out if this was possible. The difference, we looked at it, the difference in what she had paid and what my mother had paid was like, 300%, 350% times more than my mother had paid to get basically the same degree at an institution that was, less, it was a community college, so it was a longer program, it was all kinds of differences. Just the generational difference here is really stark. Specifically in the last, just since the Great Recession, so now 7 or 8 years since really when we started experiencing the crash, state disinvestment has gotten even worse. 49 out of 50 states are investing less in their higher education systems than they were before the recession. You can guess, if you remember what I said a couple minutes ago, what the only state is that isn't. And I won't, North Dakota has many other attributes, so we shouldn't, go too far, but 49 out of 50 states. There started to be a slight uptick last year. People were very excited. Reinvestment is happening. 1%, a 1% reinvestment. That's not actually something to feel that excited about, unfortunately. One other, to tell you a little bit about how many people here are from Pennsylvania versus from out of state? Okay, so many of you. So you all are much more familiar than I am with what's happening here in Pennsylvania, in your university system. But do you have a guess about where Pennsylvania might fall vis-a-vis the rest of the country in terms of affordability? 40? Anybody else want to guess? Out of the 50, where you would fall? 48. That's right. How do you know that? That's all right. Either you read our DEMAS report or you're just very intuitive. Only New Hampshire and Vermont actually are less affordable. So we also have a report, we have a series called The Great Cost Shift, which both tells the story of state disinvestment, but also has the facts and figures of state disinvestment. And I'd love to make it available. It's on the DEMOS website, anyone who's interested. Philadelphia, just to tell you, at both your public 4-year and your public 2-year tuitions have gone up 15% since 2007. Has anyone's wages gone up 15% since 2007? No, right? Obviously. So your 4-year tuition average in this state right now is $11,000. That's the median across the state. The national average is $7,000. So, you know, you all not only are living in the middle of a national crisis, you all in Pennsylvania, and certainly here in Philadelphia, are really living in the epicenter of the storm, as it were. So just want to open it back up and hear other folks' take on the crisis that we're experiencing right now.
And my name is Vanya Terrell. I'm from Levittown, and I'm a tax accountant. And I could fill your day with horror stories, and I tried to pick one. One that is shocking to me is a young lady who has serious student loan debt, became extremely ill, had to move back home, and is no longer able to work. The only debt she had was the student loan debt, and she was not permitted to bankrupt out of it. You cannot get rid of student loans with bankruptcy. So they are taking a portion of her Social Security disability check to pay off this loan. It's disgusting.
Yeah. It's a real shame.
And I have another young man, who was fortunate enough to get a job paying $40,000 a year, but still lives at home and with his mother in a small 2-bedroom condo because his student loan interest, not the payment, but the interest for 1 year was $16,000. Could not afford to get a place of his own on $40,000 a year income and can only deduct $2,500 of that $16,000 off his tax return. You want to hear? I got that.
Let's hear it. Maybe we're right there. Oh, sorry. You took it. Go ahead.
Thank you. I want to suggest that more people are going to college now than were when I went to college 50 years ago. And it's not because they love learning. It's because it's seen as a way to get a job, and this is a lie. People are going to college to get a job, and there are no jobs for those people.
I'm Roxy Dector from New Jersey. I wanted to call anybody who would talk to me about public banking this week. So I called the Bank of North Dakota, and a young man called me back. And I thought, well, I don't really need to talk to him anymore. And he called me again, so I thought, well, I'll talk to him. He would have talked to me for 2 hours if I would have stayed on the phone with him. But what I got from him, I weaved a little tale, a kind of a fiction, partly true, partly not really true. I told him my son was thinking of moving to North Dakota. He had a 9-year-old son, and he probably would want to go to college. How would it work in North Dakota? And so after he told me about we'd have to go through the Pell Grant, the Stafford loan, and they wouldn't maybe be able to loan all the money to us. They would loan, I think, up to $50,000, but I don't know if that was for 4 years. I didn't really get too detailed. And I said, well, how much is the interest rate? And he said, well, we have this thing called Deal 1. And Ellen, you probably know lots more than I do. I hope I get it right. He said that would you could take out student loan money for 1.47%, and the 6 surrounding states, they could take loans out at 2.47%. I had to sit down. And I said to him, I'm thinking of moving to North Dakota. And I said, why are people streaming to get in? He said, well, you would think. And then I said, so why are you doing this? What is your motivation? Are you doing it because you just like people to say, gosh, you're nice? Or do you care? And he took a minute to think about it, and he said, I think it's because we care. Now, whether he cares could be the answer. I don't know what the rest. He said, we do have quite a lot of money. And he told me how much. And he told me I could look and find all this. So I said, if I come to North Dakota, I'm totally coming to visit you in your office. And I said, and I'm going to encourage my son to move there, which I'm not really sure about that. But I think the thing that struck me the most is that people in North Dakota, I think, just have this and take it for granted maybe and just are used to it. And we're just not. We're used to being hung out to dry, abused. I felt like the people in the rest of the 49 states are abused women. Sorry for the gender description. But I think it is true. And I want to write a letter to Wall Street. And I wanted to say this, and I need your permission before I do it. I want to say, Dear Wall Street, we're sick of you. Signed, all of the public banking movement people.
That's great. And I think what we're getting at here, just to name it, is that we're talking on two levels, really. At the one hand, we're talking about interest rates and you know, what people, can you afford a house when you're in your 30s if you went to college and you are still paying off your debt? And we're talking about how public policy, or public banking and public policy could be a solution in a very pragmatic way. But at a much deeper level, we're talking about democracy, what government is, and what public goods are. So I want to go back, I think, also to what Mike said at the beginning, really, and I won't try to repeat it, I think he said it so well, but why this movement, and I really believe, and we at Demos believe, that democratizing the power that we have vis-a-vis finance in this country right now, that is the call that we have to answer. And I was very involved in Occupy Wall Street, and I know that there were many, many folks, obviously, who felt very strongly. And I think, you know, I'm also, as I sometimes say, tongue-in-cheek, part of the Stephen Lerner Industrial Complex. So I work in collaboration with many of the campaigns that were spoken about earlier in terms of how we take action vis-a-vis the bad deals that cities have gotten, and the bad deals that those of us who currently are suffering from student debt have gotten. But what we need are solutions, and what we need are solutions that are both pragmatic and will work, and we have examples of how they work in this country and internationally already, and certainly great people on the other end of the phone to ask about them. That's awesome. And we need solutions that are inspiring at a deep level for people who feel like the system is so broken that there is just nothing we can do about it and no hope. And so I think that I'm really excited about the public banking work and public banking movement because I think it provides that core sense of democracy and empowerment that a community should have vis-a-vis the finance system, and you know, with regard to our experience with higher education, with our regard to so many other policies that public banking would connect with and allow for. So let me see. So let me go, you two folks here, and I don't know where the mic went. Oh, I'm sorry. Okay, you go first.
Professor at Rutgers University. And I teach ethics and science in society. And one of the projects I did last semester had to do with veterinary students that want to go to veterinary school and the debt that they would incur. So what we tried to do was not a public banking organization, but we got a hold of the alumni that were veterinarians, and we asked them to come together and provide loans to potential veterinarians. So there are programs out there, like there's one for engineering, that engineers get together and they provide low-rate loans for students that are aspiring engineers. So there is that possibility.
That's great to know about. I'm paying off my own debt. My sister is in veterinary school, and because my parents can't afford to really help her with her tuition, I'm helping her with her tuition. And you'd be surprised that veterinary school is more expensive than medical school. I didn't know this until I started being part of paying for it. It's really astronomical.
Kaplan from DC. I wanted to step back and put it into an even larger political context. Some of us remember organizing around the Vietnam War and the role that students played in that movement. And I think that today what we're seeing is the students being deliberately shackled so that they're really in the chains of having to pay off their debt, trying to get jobs when there aren't good jobs available. I don't think this is an accident. I think that it is a way to try and prevent a real movement among the students from arising again when students need to be part of that movement. I'm sure many want to be a part of the movement. So the work that we're doing, thinking about public banking, doing these other initiatives, is really a part of a very large effort, if we step back, at removing these chains so students once again can be the kind of leaders for the next generation that we want. So any thoughts on that?
That's a great point. I think that's very true. And I also want to connect it directly to the racial justice movement, because I think we have to also remember how students, when we're thinking about youth today, we have to remember as part of this whole equation, people who never enter in the first place. And because low-income people in this country are disproportionately people of color, because of the history we have in this country of racism, there is a rising and a growing racial justice movement in this country today that's really led by youth and students. There's actually a meeting this weekend in Ferguson of being led by a youth and student sort of set of leaders who are continuing to organize. And so I think you're right. And I would add to that that there is still an incredibly vibrant student movement. And I have to say that from where I sit now, having both been a former student leader and now being sort of more in the think tank world, that we forget that too often. That those of us who are older and who are organizing, we forget that actually we need to be deeply connected to the student and youth organizing that's going on and really consider those folks as leaders in our movement and not doing a separate sort of youth thing. Please, go ahead. Yeah.
I just wondered if you considered what Obama has done about the loan servicers taking it back into the public realm and reducing the interest, I think. I'm not exactly sure of the terms, and then there could be loan forgiveness after 10 years, which is a long time to wait, but nevertheless, there is a precedent here of government actually stepping in and taking on that role. What's your response to that?
There have absolutely been important steps taken, especially to deal with the crisis for current borrowers, and that's, I think, what the president has been addressing recently, and what a lot of the debates, certainly led by Senator Elizabeth Warren in Congress, have been, making relatively small given the scope of the problem, but really important steps. But I think that, we at Demos feel like it has to be a both and. It has to be a both and of dealing with the 1.3 and growing trillion dollars of debt and the interest rates we're paying and the impact that's having on the economy. But we need the structural change for the future. Otherwise, it's actually just going to keep getting worse no matter what sort of short-term reduction policies we put in place. We have to campaign and organize and win public reinvestment in higher education as a public good. Please go ahead.
Bill Collins, Bucks County, Pennsylvania. There's a whole apologist argument that the schools themselves are taking advantage of the money that's available and raising the cost at the school level. How much of that is true?
So I don't know if folks could hear, he was asking about the argument that schools are raising the tuition themselves in order to bring in more from students. So there's, I think there's both truth and falsehood in that. I'm not the higher education expert at Demos. We have a senior policy analyst named Mark Kuhlsman, who is a real deep expert on these issues, and he's been crafting what we call a federal-state partnership to entice through sort of carrots and sticks states to reinvest with the federal money that is already flowing into the system, essentially changing how the states get it and where they have to, what benchmarks they have to meet in terms of meeting the needs of affordability, especially for low-income students. And the reason is because that we need to make sure that states are not taking more investment, let's get more money in, raise tuition over here, and then on net, it's the same or even worse for students. So that's something that I think can be addressed with careful policy design. And I think it's an argument that's probably being, and I don't have the facts and figures to back this up myself, probably being used too often as like, well, they built a climbing wall, and that's why you're, the fact of the matter, go back to that statistic I said about, most, over half the students in this country are not sort of on a traditional 4-year flagship campus. They're, at Rutgers or, and I'm from Massachusetts, sort of UMass Amherst. They're at the rest of the public system where there is no climbing wall. There is, a serious retrenchment in terms of the investment the state has made in the basic functioning of public universities and colleges. So that would be my answer to that.
Yes, my name is Clark King. Thank you very much, by the way. During the FDR administration, I think it was Harry Wallace said that high unemployment is a national security priority. We have to fix this. In post-World War II, they gave the veterans a free college education. And this was noted that it returned 6% to the economy. So now in this day and age, they're charging 12, 14, 15% for a college education. Doesn't make sense. And there is a certain amount of fraudulent inducement if these students think that there's a job waiting for them after graduation. So at what point do you frame the whole student loan unemployment crises as a national security crisis?
I think that is excellent framing. I think that's really useful because I think that we are experiencing in this country right now extreme insecurity. We also clearly have what's more usually meant by national security crises, I think, but we have right now exactly, as you said, I won't repeat it, we have this nexus, well, I will repeat it, I guess, we have this nexus of higher education affordability, unemployment. If you do have a job, your wages and benefits are under attack, unions are under attack. We have to see this as one whole, and we have to, I think what's so important about this movement and work is that we have to not stay stuck with the problem. We have to go from the problem into specific tangible solutions that we can fight for, as well as having a deep and broad vision of what our economy needs to look like in the big picture.
I just want to also really emphasize the racial justice issue here, because I don't have the stats in front of me, but I know over the last 20 years there has been a tremendous drop in the enrollment of people of color into colleges because of the tremendous debt, which some of them don't have the collateral from working class and poor families. They can't enroll because they just don't have the money to do it. And I've also seen stories where people have used credit cards to try to get themselves through college. So it's a really huge issue for students of color, students and families of color, in terms of being able to send their kids to school.
Yes, and I'm sure that's because after the Great Recession, families of color lost their wealth because of losing their homes at such a more disproportionate rate than white families, and so that must be directly related, I'm sure. So I'm thinking I need to wrap up. Thank you all. Thank you for having me, and I would just really urge folks to keep this conversation going about public banking and keep on organizing. So thank you.
Thank you so much.
Thank you for joining us for this presentation from the East Coast Public Banking Symposium, Public Banks for Public Works, Banking on the Commonwealth, held in Philadelphia's historic Friends Center Meeting House. For more information about public banking and the movement to create a national network of new public interest banks, visit the Pennsylvania Project at publicbankingpa.org. Or to learn about the national project and access a variety of educational information on the topic and developments in the field, visit the Public Banking Institute at publicbankinginstitute.org.